Good morning, and wishing you a terrific Thursday ahead. Welcome to today's episode. Talk about three things: Fed minutes, Bitcoin tumbles, earnings from Target, Home Depot, and Lowe's. First, the Fed minutes. A number of participants suggested that if the economy continued to make rapid progress towards the committee's goals, it might be appropriate at some point in the upcoming meetings to begin discussing a plan for adjusting the pace of asset purchases, is what the minutes said. A couple of more statements from the minutes. A number of participants remarked that supply chain bottlenecks and input shortages may not be resolved quickly, and if so, these factors could put upward pressure on prices beyond this year. They noted that in some industries, supply chain disruptions appear to be more persistent than originally anticipated and reportedly had led to higher input costs. Despite the expected short-run fluctuations in measured inflation, many participants commented that various measures of longer-term inflation expectations remain well anchored at levels broadly consistent with achieving the committee's longer-run goals. So that's the Fed's take on inflation being transitory. Regarding asset valuations, several participants noted that risk appetite in capital markets was elevated as equity valuations had risen further, IPO activity remained high, and risk spreads on corporate bonds are at the bottom of their historical distribution. Even so, participants judged that the economy was far from achieving the committee's broad-based inclusive maximum employment goal. Payroll employment was 8.4 million jobs, below its pre-pandemic level. Stocks dropped on Wednesday as Federal Reserve hinted at possible tapering in the minutes from its April meeting that should have put an outsized dent into tech stocks, but that wasn't the case. The Dow was down 0.5%, the S&P 500 declined 0.3%, while the Nasdaq was pretty much flat. The Nasdaq's outperformance was strange. The Federal Reserve minutes had hints of tapering or reducing the size of its asset purchases. The language wasn't specific, simply saying at some point in the upcoming meetings, and was highly contingent on US economy continuing to strengthen. Still, less money going into the bond market could reduce bond prices and lift their yields. And that should put an outside dent into valuations of growth and technology companies and boost the cyclical companies in the Dow. For tech stocks, it might have simply been a case of sell the rumor and buy the news. Fears of inflation and the tapering that would follow have caused the Nasdaq to drop nearly 6% from its April all-time high, while the Dow has just fallen 2% from its own record. Now that the minutes appear to have confirmed the possibility that Fed might consider tapering, despite its protestations, investors might have moved on to other things, at least for one day. Yesterday was all about Bitcoin. It was all over the news. Bitcoin, the volatile digital currency that briefly became a $1 trillion market, plunged Wednesday as its month-long slide morphed into a frenzied sell-off. The market has been dropping since Elon Musk began questioning Bitcoin's negative environmental impacts about a week ago. One more recent catalyst may have been China's decision to reiterate its ban on financial institutions facilitating crypto transactions. The extreme swings caused outages on major crypto exchanges like Coinbase and Binance. Elon Musk, who kicked off the latest bout of volatility with comments last week, sent a tweet implying that Tesla wasn't among the sellers, while Cathie Wood said her monitors flashed a capitulation and put the digital token, quote, on sale. Bitcoin plunged to within 30,000 on New York Open, but traded up higher at about 38,000, now trading at about 39,000. Moving on to results, Target's first quarter results are yet another sign of the health of the American consumer and the big box retailer's own health. The company's results over the 3 months ending May 1st not only blew past prior year figures, but also trounced analyst estimates. Our performance in the first quarter was outstanding on every measure and showcased the power of putting our stores at the center of our strategy, is what the CEO said. Comparable sales grew 22.9% compared with last year, helped by the continued popularity of same-day services such as order pickup and drive-by pickup, which combined saw year-on-year gains of about 90%. Apparel was a leading category for Target, with the company seeing more than 60% gain in sales as consumers rushed to revamp their wardrobes. Home items followed, seeing gains in the mid 30% range. The growth in clothing and home goods mirrored results from Walmart, which reported Tuesday and also noted that people are flocking to its stores for items beyond the basic necessities. Shares were higher. JD.com beat on revenue and profit. In tech, Cisco slumped after its forecast for adjusted profit missed estimates. Lastly, results from Home Depot and Lowe's. For several quarters now, executives at Home Depot and Lowe's have faced the same old question. Just how much more can consumers spend on their homes? The answer has been consistent, more than you think. Home Depot's comparable sales increased 31% in the quarter ended May 2nd compared with the year ago period, its highest growth rate since the pandemic began. Lowe's comparable sales rose 26% in the same period. Both retailers beat Wall Street expectations handily on their top and bottom lines. The two retailers' results seem to dispel some bearish theories around consumer behavior. One fear was that rampant inflation in raw materials would motivate consumers to postpone or cancel projects. Another concern was that strong demand from do-it-yourself consumers would wane quickly because much of it was driven by fleeting pandemic habits. That doesn't seem to have been the case so far, with DIY demand still growing at a healthy pace, though both retailers reported even stronger demand from professional customers. After reaching their respective historic highs earlier in May, Home Depot and Lowe's have given back some of their gains in terms of share price performance. Home Depot now trades 22 times forward earnings, while Lowe fetches about 18 times. Both are only slightly higher than their respective 5-year averages. That's the update. Stay safe and healthy, and I'll speak to you tomorrow.